Imagine bots controlling your finances. Now, it is more probable than ever before. By 2025, over 1 million AI agents will be unleashed on the blockchain, autonomously optimizing returns and deciding your financial fate. Forget human advisors. Are you prepared to surrender control to the algorithms? Or will you learn to fight back before they take everything? The market in 2025 is a puzzle. And knowing where to invest your money can feel like navigating a maze. One big thing to watch is commodities. Experts think commodity prices might go down a bit overall. Oil prices, for example, are expected to drop because there's a lot of supply. But global events can change things fast. If there's risk of conflict in certain areas, that could push prices up, making oil a volatile investment. A recent report suggests prices may fall almost 5% in 2025. What about stocks? The global economy has a big impact. If the economy is doing well, growth stocks, companies expected to grow faster than others, could be a good opportunity. But remember, these stocks can also be risky. You'll want to look at things like how much a company earns, earnings per share, and whether its stock price is reasonable compared to its earnings, PE ratio. Another report mentioned healthcare and biotech as sectors with some promise for growth. But policies and new technologies could also shift things around very fast. Bonds are often seen as a safer investment than stocks. High interest rates can make bonds more attractive. If interest rates stay high for a while, bonds can give you a good return. Many see this as a big opportunity for returns. Real estate is another option to consider. In the housing market, interest rates play a huge role. If mortgage rates stay high, fewer people will buy homes, and that can slow down the market. Experts say home sales might get a slight boost after the election, simply because it can make things more predictable for people. A new report forecasts as much as a 9% increase in existing home sales in 2025. Now let's talk about crypto. Investing in crypto is not safe and comes with much volatility, so invest only what you are ready to lose. Some people predict Bitcoin could go way up, maybe to $180,000, but they also warn that it could drop a lot, perhaps by 30%. Another potential option for growth are stablecoins. The report mentions that these are poised to become the new way the world does business. You also need to take a good hard look into NFTs. These had a big market in 2020 to 2023. Global economic growth plays a big role in all these investments. The world's economy is projected to grow almost 3% in 2025, but what if trade policies change, the new president, trade conflicts, and so much more? You need to factor these in, or you could see heavy losses. Different parts of the world have different situations to consider. In Europe, experts think some countries might struggle with their economies, which will have an effect on the money market. Keep in mind, these changes can have a negative or positive effect, but places like China, even though they're dealing with trade tensions, are still very influential on the global stage. Countries such as India will be a great choice, as mentioned previously. With all the talk about trade, here's what it could mean for you and your investments. A trade war leads to tariffs. Tariffs tend to bring out bad changes. Tariffs are mostly aimed at China, but it can still affect global markets. Experts from the World Bank are even saying that as tariffs are instated, then exports from these countries will fall, which can also bring down the rest of the world. Another thing to consider that hasn't been highlighted a lot here are the unsecured lending. These loans are not backed by underlying assets and many investors, which can also create financial volatility during the economic hardship. The rise of AI and all the other new innovative technologies means more energy and an energy transition. For example, a group of companies are working with utilities to develop greener energy, such as green hydrogen, and so on. To summarize, 2025 is shaping up to be a complicated time for investing. The economic outlook is uncertain, with high interest rates and various risks affecting different markets. It's important to spread your investments around diversification and consider the advice of a financial advisor to help manage risk and take advantage of opportunities. As a financial advisor, I advise you to take these findings with a grain of salt. While I have mentioned some of the better options available for you, it is still difficult to assess what the actual performance of each fund would be in the long run, as everything is subject to change and depends on a lot of things outside of my control. There will probably still be new innovative technologies and commodities that we cannot predict will exist. You must learn more on your own to make the correct and suitable decisions for your personal finances, or visit a financial expert for custom planning. We'll continue to monitor these and other investment options as we head into 2025. There are always unanswered questions. Some big questions are: what further and new investment opportunities will develop by the end of the year? What about AI trading agents and other AI-driven technology that will emerge? And who will those technologies impact? If you found this information helpful, please like, share, and subscribe for more insightful updates. Stay tuned for our next video.